It's Business Morning, live on Channels Television. Thank you for joining us. I'm Ladi Williams. First, let's look at what's in the news and world of business. The federal government is set to review Nigeria's trade policy to allow the country access regional markets in preparation for effective implementation of the Africa Continental Trade Agreement. The Minister of Industry, Trade and Investment, Ani Adebayo, who made this known at the opening ceremony of the 2021 Lagos International Trade Fair organized by the Lagos Chamber of Commerce and Industry, says the fully revised versions of the trade policy will contain significant strategies to address issues such as infrastructure bottlenecks and low domestic demand for made-in-Nigeria goods, which remain major concerns of traders. He explained that the updated trade policy will also strengthen domestic value chains, particularly in the agribusiness sector, and improve the country's current economic fortunes. And Unity Bank PLC has handed out a total of 10 million naira as business grant to 30 core members in 10 different NYSC camps across the nation in the latest edition of its flagship Youth Entrepreneurship and Empowerment Initiative and Copreneurship Challenge. At the Bayelsa State NYSC camp, one of the 10 venues where the event took place, the top 3 winners were handed the star prizes of 500,000 naira, 300,000 naira and 200,000 naira for their brilliant business ideas. Do take a listen.
The era of waiting on the government to provide employment is gradually wearing off, as some youths are deciding to take up the challenge of creating jobs rather than waiting for employment. Here, some of the members of the National Youth Service Corps NYSC across the country are taking advantage of the 10 million naira business grant of the Youth Entrepreneurship and Empowerment Program, known as the Copreneurship, an initiative of Unity Bank PLC.
Put your hands together.
We've gone through your documents, and so we know what is there. We just need you to tell us, okay, why you need us to fund you.
And one after the other, these 10 selected core members took turns to pitch their business ideas to the panel. And in the end, the top 3 emerged at the Bayelsa camp out of several others that began the process in 10 different NYSC camps across the nation.
Unity Bank has shown that with them, they are able to unite youths and make sure our ideas don't die.
Madweke Uchenna won the star prize of 500,000 naira, while Michael Barnabas and Akikbelu Itunu emerged as first and second runners-up at the Bayelsa NYSC camp.
Our own input to national development and economic prosperity is that we believe that when the youth are empowered, then it can translate to, development and also contribute to the nation's GDP growth.
This fashion and design is not just the only skill I have, but it's just my major line of business. So I was just being positive that, I don't know, miracle can just happen, and Unity Bank happened to be the miracle, and I'm very grateful.
This is the 7th edition of the Unity Bank Copreneurship Challenge, and it took place simultaneously in Bayelsa, Lagos, Ogun, Edo, Enugu, Sokoto, Akwa Ibom, Osun, Kano, and the FCT, producing a total of 30 winners across 10 states.
Now to our first conversation. Now, the 2021 United Nations Climate Change Conference, also known as COP26, holding in Glasgow right now. And we'll have our world leaders gathered this past week to show their seriousness about addressing a planetary emergency. Well, Nigeria gets most of its export revenue from sale of crude oil. How would net zero transition impact Nigeria, and how will this work? Let's talk to John Uwajimogu, now West Africa Energy, Oil and Gas Leader with Ernst & Young. Great to have you on the program. Good morning.
Thank you. Good morning to be here.
Yeah, so it's all about COP26. It's COP26 week right now. It's all about net zero transition at this point. What are the key takeaways for you so far?
So for me, it is all the pledges and the commitments that the world leaders have put in place with that target of reaching net zero in 2050. But from where I am seated in Nigeria and in Africa, and in recognition of the disparity on what it takes to hit that target of net zero in 2050, what I find very interesting is also the commitment to support particularly countries in the global south towards making that transition to net zero in 2050, because the responsibility and the cost of making that transition, particularly in economies such as ours, where, like you mentioned, it's heavily dependent on hydrocarbons, is going to be quite an undertaking to be able to make that shift to renewables, to renewable energy, when in fact we still suffer from issues of energy access, and we've not industrialized at a level where we can afford the higher cost propositions that renewable energy often entails.
Right.
So therefore, that recognition of the disparity and the ability to hit that 2050 target is, for me, what resonated the most.
Okay, and we've seen President Buhari pledge 2060 and at a cost for about $400 billion compared to what appears to be, a global consensus of 2050. What factors do you think accounts for this, differential in targets?
I think that comes back to what I said earlier, is the recognition that the pathway, there's not going to be a single pathway to net zero. If I echo the words of the Honorable Minister of State, Cyprian Silva, the Seplat Energy, he emphatically said there's no single pathway to energy to net zero. And the reason why that is important is because for countries that are, particularly in the global north, in the OECD countries, that have industrialized at a level that gives them the capacity to be able to hit those targets, it is quite different from us, who are still developing, and in some instances in Africa, underdeveloped, and who, incidentally, would need hydrocarbons to get to net zero, albeit cleaner hydrocarbons. So which is the position that Nigeria has actually taken, is that the narrative that frames our energy transition journey is natural gas as a bridging fuel. And natural gas that bridge having a very long tail. So for us, natural gas is going to play that huge role in us being able to get to that point where net zero becomes possible. And if you look at where we are in terms of energy access, in terms of our industrial capacity, and also what is very important as well is our contribution to greenhouse gases. If you take all these three variables into consideration, you can see that countries such as Nigeria will have a much longer leeway than the 2050, which, although the global consensus particularly applies to OECD countries and the global north, who contribute much more to the greenhouse gases than we do.
Right.
So if you put it in that way, then there shouldn't be any single path or single time frame for people in different regions.
Okay.
People will get at it at different times.
Okay, you did mention, gas. What role does, gas play in all of this?
So for us, gas, it's a very important fuel in that journey. It's a energy transition, I'll say, will happen slowly and all at once. We've been talking about it, but technology advances would very quickly push it to the fore, right? But until the time that technology advances in being able to incorporate renewable energy, in being able to store renewable energy, such that it can become, not to be too technical, a credible source of base fuel, as in you can use it at any point in time, whether the sun is shining or not, which is what battery storage provides for you. Until at that time, we have to take a gradual approach to net zero. And for us, it's that initial switch from datear fuels like gasoline and diesel to CNG, to gas, to natural gas, and then from there, you can then as technology also matures alongside, it can then move into renewables.
And I see some
But
of the leaders there are not really a fan of natural gas
yes,
at this point.
well, this is where maybe geopolitics or geoeconomics comes into play. I mean, we are blessed with huge endowment of hydrocarbons, natural gas in particular, ninth largest in the world. Germany is not as blessed as us in terms of having such hydrocarbon endowment. So it is in their interest to finance alternative sources of energy in order to secure their energy access. So for us, our energy access lies in natural gas, which is clearly abundant. And if you juxtapose that against where we are, again, the economic variables have to be always be front and center. We're at a point in our development where economic growth is very key. Energy access is very key. So it's very difficult when you're dealing with such existential threats to come and say, well, we're not going to use our abundant resources of natural gas to generate energy because we want a cleaner world. It's very difficult when those threats are existential to you to make such arguments. And also, when you take, like I mentioned earlier, take into consideration that your contribution is quite minute compared to others who, by the way, have also used that same fossil fuels on their way to prosperity. So for us, that natural gas, it's very important in that transition. I mean, we'll make our own contribution, of course, and that's why the government have committed to us converting from data fuels to natural gas and pushing natural gas. In fact, one of the major initiatives of the government is the Decade of Gas.
Decade of Gas.
And a number of programs and initiatives that have been put out there, like the National Gas Expansion Program and the push to convert mobility vehicles to start running on natural gas, which is transportation is a major source of greenhouse emissions, and with being able to do that switch, you can very significantly reduce the greenhouse gases that are being released.
But realistically, though, how possible is 2060?
26. Well, I mean, how possible is 2050? How possible is
For
2050?
Nigeria?
For Nigeria, it's very doable because there's a pathway that's been clearly laid out, and that starts with that decade of gas. I mean, and we've seen models that have worked in this country. If you look at the penetration of liquefied petroleum gas, LPG, also known as cooking gas, in being able to displace kerosene and firewood, you can see what is obtainable when we now start getting into the mobility space and start using natural gas, for example, rather than gasoline to fuel our cars. So if that transition, just if we are able to achieve similar success that we did in cooking gas, not that we're there with cooking gas, there's still vast parts of our country and population that are still on firewood.
Because cooking gas, the prices surged recently.
Prices have surged recently, of course. But there are various reasons why prices have surged. One of it being coming out of COVID, and demand has been suppressed for so long, and now that suppressed demand is now coming up and intensifying energy requirements. So, but if this were to stabilize, you'll see increased penetration of LPG, and the same thing would obtain as well. So for us, 2060 is really achievable. We just have to follow with the plan, transition to cleaner, lower carbon energy, such as natural gas. And when technology, the cost and performance of renewables is at par with fossil fuel, then people will naturally make the shifts.
Do we have a clear pathway as it is right now?
Yes, I believe we do, and that's with our development, our transition narrative. It's clearly that we're going to convert to gas, while at the same time increasingly incorporating renewables into the energy mix, and that's the way to do it. if you think about it, previously most of our energy came from oil, diesel, and we now move into natural gas and increasingly start incorporating renewables into the mix. We see people, most of us, own either an inverter or solar home systems, right? And so consumer preference is also moving alongside, and with increased awareness and advocacy on the environmental and support, capital support towards development of environmentally friendly energy projects. You see all this can be happening alongside, but the true tipping point, it's really when the cost and performance of renewable is at parity with fossil fuels. Now, in Nigeria, in recognition that an energy mix is the first part, and then a transition where cleaner energies would constitute a bigger component of the total energy package. The Nigerian government is alongside encouraging increases of solar energy and renewable energy generation into the overall energy mix. If you think about it, there's the Mambila, the Zungeru. These are two very large hydro-powered generators that be coming onto the grid. You look at the work that the Rural Electrification Agency is doing by extending energy access to areas where the grid has not reached. So by doing that, and you're able to onboard people into a centralized energy usage that is based on renewables, and by the time technology and even the grid reaches them, they've already used to using renewables as a source of energy. So can we do better as a country? Obviously, but with what is in place, if properly executed, I think we're on the pathway to reach.
And I've seen concerns being voiced that this transition can actually crush Africa.
Certainly, certainly, and if you and I'll tell you one reason that is very critical is the fact that in Africa, in Nigeria, in Africa, most of the financing for large-scale projects often come from the global north. It comes from outside. And given the historical affordability issues that we have for being able to finance large projects, you typically need concessional financing or blended financing that comes from development finance institutions. So when these institutions begin to turn off the tap, so to speak, then it creates a challenge if the domestic sources of capital is insufficient to finance this project. Right. So while we've taken the position that natural gas is going to be the bridging fuel to energy transition, well, if we can't finance gas development projects, then how are we going to even be able to realistically take that position? So for us, it actually is an existential threat to companies operating in this space. If the major sources of financing now decides, which already is sort of happening, where certain global North pension funds, certain financiers are increasingly discouraging investments in fossil fuel without any regard between oil or natural gas. So that's a major issue.
But I'm wondering, what should companies be doing, right now to position themselves, for this transition?
For us, you have to look at this as the twilight of the oil economy. That is for sure. How long that horizon is, it's really unclear. But this is the twilight of it. Whether it's 10 years, 50 years, or 20 years, it's unclear. But what companies who are already in this space is that it's a ticking time clock pressure. You have to maximize what you can extract from your fossil fuels while adroitly pivoting to clean energy. and figuring out in the clean energy space, where should I position myself? What role should I be? And looking at critical tipping points that should signal how soon energy transition is upon you. We at EY, we've identified several tipping points that companies should look at to know how near-term energy transition is. And one of them is, like I mentioned, when the cost and performance parity of cost and performance of, for example, electric vehicles reach parity with internal combustion engines. That's a clear point that energy transition has arrived. And when, for example, when the cost as well and performance of self-generation, the cost to self-generate and store energy is cheaper than for it to be generated elsewhere and transported to you, then you're more likely to generate yourself. If your solar energy that you generate is sufficient for you, then why do you need to? Exactly. So those tipping points are very important for companies to be on the lookout for, and at the same time, strategically look at how to pivot to clean energy.
I guess it's all about looking at opportunities. Also
course,
within this clean energy space. All right, Mr. John Uwajumogu, West Africa Energy Leader, Ernst & Young, thank you so much for coming on Business Morning. It was great having you.
Appreciate it.
All right, commodities market update is next after the break. Do stay with us. This is Business Morning. Welcome back. You're still watching Business Morning. We're going to get a situation report now from Ihiala local government in Anambra State, where a supplementary election for the governorship election is holding. And our political editor, Shewo Kimbaloye, is standing by right there at Ihiala local government area. Great to have you, Shewo. Can you bring us up to speed on what's happening there right now?
All right, thank you so much and welcome to Ihiala local government area. This is the headquarters of Ihiala. And this is a major distribution point for materials and personnel. So if you can allow you to see what is happening, don't forget INEC said that this exercise will begin at 10 a.m. and this is a major distribution point. What we've been saying over the last hour or so is a sort of organization and distribution. So let's move closer so you can get a sense, a feel of what is happening. Ad hoc officials are loaded into some of this vehicle. Some of the transporters are sorting themselves out with the logistics, and you can see the materials for the exercise is loaded in the vehicle, and of course the ad hoc officials that are meant to be here for the exercise to begin. So again, let me give you a sense of what is happening in terms of security. It is heavily secured. Police officers are here manning the exercise. Also, this is serving as their own distribution point for this exercise. We've seen truckloads of police officers moving in and out, giving them, getting instructions from their commanders. And so you can see across the aisle here, you see police officers that will accompany the materials and the personnel. They're already standing by and they're ready to go. But it does look like it's getting a slow start, because this is where the distribution is happening. And if you can imagine how heavy the distribution exercise is going just at this point, it tells you that it might be starting slightly behind schedule, because if voting is supposed to start at 10 a.m. and we're still seeing this kind of distribution, it tells you that we are slightly behind schedule. So if we move sort of a bit more, so we can give you a sense of what is going on. So you see the police officers who are standing by to take them across. And this gives you an understanding of where the police officers, almost all of them slept over in this place. You can see their uniforms being hung around the vehicles, and it's a large area distribution point for security. And of course, so see, as far as the eye can see, there are all the officials who are down the road, who are trying to sort themselves out in the 323 polling points that are in Ihiala, about 20 RAs and that are here in Ihiala. But it gives you a sense of what is happening generally and the attention that has been given into this area. Laddie, see behind me, also police officers who are standing by. Probably they passed the night here. They've been deployed for the last 24 hours or so, and now they're just waiting to accompany the vehicle. So you see the heads of personnel across this field waiting to get out of here. So the exercise is meant to start at 10 a.m. and up to 4 p.m. It's going to be another long wait to see how this will commence, because the expectations are that this is supposed to commence, the voting is supposed to commence at 10 a.m. and end at 4 p.m. But so far, this is what we can tell you. This is the local government headquarters in Ihiala, where the attention is for the conclusion of this very governorship election, which started on November the 6th, and it has led us up to this point where the supplementary election is supposed to end the whole exercise. And we'll be waiting here, and from this point also monitor what is happening at the polling units. Laddie.
All right, Joe, thank you so much for that update. Looks quite busy there. We'll get more updates from you later on. That's Shimon Kimbaloye there, live at Anambra State political editor. Thank you so much. All right, let's get back to the program now. We have oil prices. It rose for the third day today, with Brent crude up 8 cents at $83.51 a barrel after gaining 0.8% on Monday. U.S. West Texas Intermediate crude futures were up 10 cents at $82.03. Also after getting 0.8% gain, 0.8% previously. Analysts believe more consumption growth lies in wait once travel begins in earnest and jet fuel demands pick up. Now let's get to our commodities market update. We have Bolanle Agbaji now. Join us for more updates on the commodity space. Great to have you, Bolanle.
It's great to have you, sir.
Yeah, so we see Brent and WTI still above $80 per barrel. What's driving sentiment at this time, since the bulls are in control in this one?
Yes, the market is still very, very bullish.
Yeah.
We're still seeing pent-up demand, increased demand, and it's still going to keep going, in this trajectory, just because, we're expecting the winter, period. And most analysts are expecting the fact that, we're here to see, like, terrible winters. And what does that mean? That usually means, increased demand for oil as per heating products, just because, the alternatives when it comes to gas prices are also relatively high. So it's literally bullish for, the oil market. And also the fact that, Saudi Arabia decided to increase its domestic price as well. So, so those are the aspects that have, or the reasons why the oil market is bullish at the moment.
Okay, well, but at what price do you see oil topping out, going forward?
Well, $100 is what, analysts like Goldman Sachs is looking at the moment. But at the same time, we expect that in the short term, so within a week to 2 weeks, we expect oil prices to remain between $83 to $85 per barrel. We try not to be too optimistic. We try to be realistic and, weigh out the fundamentals in the market.
All right, but we've seen, oil prices, going up above it, got about $85. But, it seems that Nigeria is still, struggling to actually reap the benefits of this bullish market. What's going on with that?
So thankfully, in the last OPEC Plus meeting, they kind of increased our production quota, which is great. They increased it to about 1.67 million barrels per day. So I think Nigeria had more or less struggled with the fact that we had not been able to increase our production or ramp up production to benefit from the high prices. And also, the mismatch between the revenue and, the expenses when it comes to, benefiting from the increases in oil prices. But at the same time, we're ramping up production, so we definitely should see, this have significant impact on our reserves. And more or less, if we're trying to, look at the market fundamentals properly, it should definitely positively affect our exchange rate.
But is this ramp up actually enough for us to actually see, some kind of change of revenue?
To see drastic changes in the markets, you definitely, it's not just oil. You need to see, revenue increase in all aspects of the economy. But at this point, we're seeing, increases in oil, gradual increases in oil. We're also seeing increases in the cocoa market as well, which, significantly contributes to our reserves. And we hope to see, improvements in our exchange rate. Because ideally, if the market fundamentals are right, we should definitely see, increases in dollar accretion, and that should, more or less translate into, appreciation of the naira. But just because, the CBN is still following this dollar rationing and, trying to manage expectations and speculative attacks, they're trying to, make sure that they don't, pump up so much within the market. But ideally, once you see this reserves or this dollar coming into the market, we definitely should see improvements in our exchange rates.
And we've seen our external buffers get to about $41 billion.
Yes.
But we're seeing, a little pullback there. Are we going to see another trend downwards like we saw before?
I don't think we'll see a drastic trend downwards, because I think the CBN is actively, managing the reserves. They're not, at some point you have drawdowns in the reserves, and at some point you have, ramping up of the reserves as well, because they're trying to manage, the usage of, the funds. And definitely, it's something that, the CBN is currently monitoring, and so I don't expect to see, drastic declines like we had seen in the previous years.
And also, another burning issue is the price of cooking gas.
Yes.
12.5 kg selling between 7,500 to about 9,000
yes.
Naira. Any hope of this price is actually tapering?
Yes, so Nigerian LNG has decided or agreed to, increase production of LPG within the market. I think usually they focus on the export side of things, so they're trying to ramp up, increases or domestic production within the economy. So that definitely should, ease out these increases in prices. Like a few weeks back, we had predicted that LPG price should increase to about 12,000 per 12.5 kg cylinder. That was what we had predicted for, the December period. But with this news, or recent news that we've seen, it seems like the government is actively trying to, manage what the price increases within the market. And also, the LPG industry is plagued with cylinder crisis, the fact that, there are no facilities, LPG facilities within the market. And also the gas market is extremely unregulated. So those are, some of the structural, problems with that particular industry. So this, increases in production by NLNG is supposed to temporarily ease out, the increases in prices. And, with the December period, a lot of people would, try to buy more cooking gas, for the festive season and all that. So that's coupled with, increases in general commodity prices. It's more or less
putting
like
a lot of pressure on disposable income at this point. But this switch from exporting so that we can have more to supply, wouldn't it have some kind of impact on revenue we get from the
but
the
it's all about opportunity cost. So if you're trying to reduce the amount you export, you're definitely going to feel feel the impact or the negative impact of that. But at this point, as much as we're trying to increase our revenue, we also have to think of the short-term impact on individuals within the economy. Consumption is a large part of, and it's more or less contributes to our necessity within the economy. So it's something that, the government has looked into and, tried to improve, make positive changes when it comes to.
Okay, so looking at the domestic commodity price movement, I see flour is up.
Yes, flour is about 21,350 Naira per 50 kg bag. Is quite, intense. Obviously, the dollar scarcity issue has also played into it. Nothing necessarily has been done in the manufacturing sector to help ease out cost. You also have the increases in diesel prices as well. That has increased logistic costs for, some of these manufacturing companies. So that has literally played into, the fact that we're seeing high prices or high commodity prices within the market.
What about other commodity prices? How are they looking?
So as of today, we're seeing, kind of mixed reviews with commodity prices. On one hand, you're seeing a fall in prices of like the rice, pepper, and a few other commodities, but you're also seeing increases in the prices of beans, flour, so there are mixed reviews, but we do know that moving towards this December period, we're definitely going to see, increases in prices just because of the pent-up demand and, the fact that, in December, the trend has always been, higher prices because of the increases in demand.
All right, and let's look at some of these agricultural commodities. We have some price movement there too. What's happening?
So global agricultural commodities. So it's more or less red this week. For wheat, corn, sugar, we're seeing increases in prices just because, supply disruptions have been, the trend for the past few months now. So that has more or less contributed to increases in prices, and also weather. Weather has negatively contributed to this as well, and has reduced supply. And demand, we've mentioned this several times, demand is the highest it can be at the moment. The price of cocoa, although has declined, it's about $2,400 per metric ton. And I think that's because, Nigeria, for example, which is also a major producer of cocoa, is expecting to see increases in cocoa harvest. From about 230,000 metric tons to about 250 to 280,000 metric tons. The weather is great for cocoa at the moment. And recently I saw that, Ogun State has, made a significant impact. I think they released about 100,000 seedlings, cocoa seedlings to, major cocoa farmers to try and boost cocoa production. But obviously, cocoa production, takes about 5 years, 3 to 5 years to actually plant a cocoa tree. So, these effects, should more or less boost, production. And also in Ivory Coast, Ghana, we're seeing increases in productions. Weather is favoring, favoring the production of this particular commodity at the moment.
All right, we'll keep tracking that space. Bolanle Agbaje, research analyst with Financial Directors Company. Thank you for joining us on Business Morning today.
Thank you for having me.
Thank you. All right, we'll take a moment now. Business Morning returns in a moment. All right, now for an opening call to the market, we have Will. Well, Will, seems the bulls had a swell time yesterday in the market, about 643 billion naira gain. That's the highest in a while.
Yes, Larry, good morning. That amount it's mind-blowing. I'm still wrapping my head around it, really. Equities kicked off the week with a bullish sentiment. This is like I said yesterday, they probably were on steroids because you can imagine 643 billion naira in one day. I remember the last time we had that. Investor sentiments, we saw significant buying activities in bellwether stocks, MTN Nigeria, Airtel Africa. We even saw Unilever, and that drove the benchmark index higher by 2.93% to 43,246.87 points. And that's the highest single gain since November the 12th, 2020. That was last year. That's a year ago. And this single gain added about, like we said, 643 billion naira to the market capitalization. And now we're seeing the month-to-date and the year-to-date gains increase to 2.9% and 7.4% each. Now, before we're seeing a neck-to-neck, movement for the month-to-date and the year-to-date gain, but now we're seeing almost like a jump, 7.4% for the year-to-date gain. That's massive, and I'm actually glad about that. But to talk more about this, we have Abdulrasheed Momo, a stockbroker at TRW Stockbrokers, to give us more insight about what happened in the market. Good morning, Rashid.
Good morning. I hope you're hearing me well.
Oh, I can hear you loud and clear, Rashid. It's good to have you. Okay. Rashid, you've been bullish on the market for a while now. You've been a big believer that the market will surpass the 42,000 level we crossed, earlier this year. Now, how do you feel about this new high?
Well, it's very interesting. This new high came from the surge of MTN and Airtel shares. Which actually spiked. This spike was really huge. It was really huge. It carried everyone along. As I said, technically, the last time we spoke, I said there was a resistance level the market needed to break, and it broke it yesterday. There was no barriers. It went through like hot knife through butter. So now what's going to happen is that, after yesterday's spike, I went back to historicals to check the pattern, and there's a certain pattern I realized this was the same pattern the big names, MTN, Airtel, Dangote, Cement, actually did last year. From the period of ending of October into new November, we'll see huge spikes from these companies, which actually last into the month of December. So, but the next line, the next resistant levels, the market will now be targeting 2018 45,000 levels. 2018 to 45,000 levels. So let's see how strong these big players are going to react towards those levels. That's actually the levels I'm going to watch. And again, coupled with, we're actually in the season where we see a lot of players in the market preparing for year end into next year.
Okay, so thank you so much for that. But like you mentioned, we're seeing a pattern here, and you're saying that the last time we hit this was a year ago. We were trying to hit the 2018 level, which you said is 45,000 level. We hope we'll reach that level.
Yes.
I'm waiting to see that. But we're looking at but we just want to look at the sectors very quickly and say that the banking, insurance, oil and gas didn't contribute much to the market capitalization yesterday. It didn't. But the market still was based because of the bellwether stocks. But what's happening in the banking sector? It was down 0.09%. Why are investors, especially with the parade of earnings that we just had?
No, basically what happens is that you will... Hello?
Yeah.
Hello? Basically what happens is that when those big boys pull the market, others will follow suit with time. Now, what we are seeing in the banking sector, if you notice for the past 3 weeks, the banking sector has been moving through the help of, I think, the First Bank saga. We saw those spikes within the banking, sector. So now what's happening is the time of the telecommunications to take over. Every sector now has its own time to charge. It's like, this is the first batch of guys going into war. They are now taking a rep and he's taking another sector to actually pull the stunts for there. But for what I'm seeing, all in all, I think the market is going to close very well. It's going to be good this year, but for 5,000 remains that line. We need to watch, see how market.
Thank you so much, Abdul Rashid. We will definitely watch out for that 45,000 level. And like you say, it's a stock cycle, as in the market is going around, that different sectors are taking turns to boost the market. So, Ladi, that's what we have for the markets today.
All right, we'll see how the market closes today. Fingers crossed, though. All right, Will, thanks for that. We'll take another quick break. When we come back, we do an opening call to London. To stay with us, this is Business Morning. Welcome back. Still watching Business Morning. Let's cross over to the UK now with Juliana. Great to have you, Juliana. So Rolls-Royce has been backed by a consortium of private investors and the UK government to develop small nuclear reactors to generate, cleaner energy. It seems the race for net zero is intensifying at this moment.
Absolutely, it is intensifying. Good morning, Laddie. As COP26 still continues, we're on day 2 of week 2 now. The focus is very much on gender equality or gender inequality. So lots of ladies will be leading speeches. But yes, of course, the focus to getting to net zero as quickly and as efficiently and as cheaply as possible is right up at the top of the agenda for the British government. The British government strongly believe, and this is what they published in their 10-point plan earlier in the year, that one of the best ways to generate electricity in this country is to invest in nuclear power, which is why today we've got the announcement that Rolls-Royce will be receiving a £210 million grant from the British government on top of a £195 million injection from the private sector to build these small modular reactors. It's going to be called Rolls-Royce SMR. now. And it's predicted that by 2040, it could provide about 40,000 jobs. So far in this country, I believe about 16% of our electricity is generated by nuclear power, much to the behest of critics who believe that rather than focusing on nuclear energy, because we know nuclear energy does have a lot of waste, even though it is cleaner than the way most electricity is generated at the moment, it is still quite dirty. So lots of critics would rather that Britain focus on generating electricity from solar power, wind power, tidal power. But according to Kwasi Kwarteng, the business secretary here in the UK, he believes that nuclear power is still a viable option, which is why they're investing that £210 million in Rolls-Royce today.
Right, and it seems people are already in holiday mood, and as shoppers in the UK are buying Christmas gifts earlier than usual. What's the rush here?
Well, I think the rush is the supply chain issues. Not everyone's in holiday mood. I can tell you I'm not in holiday mood just yet, laddie. In fact, I haven't even bought one single Christmas present. But according to Barclaycard, they did a survey a couple of days ago, and more than half of the people that responded said they are shopping. They're shopping already. Lots of the sensationalist headlines, which the Brits love, have really affected British shoppers. So they want to get out and make sure that they've got enough presents underneath their Christmas tree come Christmas morning, which is in 46 days time, by the way. I did just a quick check whilst you were on the ad break. It's in 46 days time, and there have been so many supply shortages. So Brits that love a shop are shopping already, and I suppose this is great for the retail sector, who've obviously had a torrid 19-20 months.
All right, Julian, I hope you and I get in the holiday mood soon. Thank you so much for the update, Juliana.
Thank you.
All right, let's cross over to the crypto market now. We have the crypto market nearing touching $3 trillion over the last trading session. 24-hour volume, we had about $127.65 billion traded in the total crypto market. That's up about 25.84%. Bitcoin dominance sits at 43.70%. Price of Bitcoin did break that 66K yesterday. It's at $68,000 this morning, up 2.97%. I have a volume of about $40.68 billion traded in Bitcoin this morning. Price of Ethereum standing strong there at $4,815, up 1.12%. Volume traded $19.48 billion in Ethereum this morning. Top alts by market cap. We have BNB there, crossing that $500 range. It's $647, up about 0.43%. Let's bring in Rume Ofi now, digital market analyst. Great to have you, Rume. Good morning.
Hey, good morning, laddie.
Rume, this market is looking like it's on steroids, actually. We see Bitcoin nearing the 70K range, Ethereum sitting high up there at 4,008. The market cap, about $3 trillion. What's going on?
You know, for now, you always say I'm always bullish in this market. Here we are, and this is November, and I'm not surprised. The market cycle holds a lot for us. By this year, we might be seeing probably 100K and thereabout. The market just hit, the crypto market entirely just got to 3 trillion, which is very massive. Then that of Bitcoin was 1.2 trillion plus, which means that Bitcoin not having a company or not having marketing budget is above Tesla, companies like Tesla and Facebook and social media giants like Facebook. This means that a lot of attention is coming into crypto, and the best thing to do at this point in time is to look at coming up with structure, because the young millennials and the Gen Zs are getting really involved. So the best thing to do is regulations from issues that will warrant anti-money laundering, terrorism, funding, and all of those issues around finance.
All right, Rume, quickly now, give me your top out number for Bitcoin.
Are you talking about at the end of the cycle or
at the end of the cycle? At the end of the cycle.
At the end of the cycle, I'm looking at 150K. I'm looking at 150K because the awareness is really growing. I don't know if you heard, Zimbabwe is coming very strong, and maybe it could be the first country away from us.
Okay. All right.
Africa.
All right. All right, Rumi, always great to talk to you. Let's see if this bullish sentiment continues in the market. Thank you so much.
Thank you very much, Labi.
All right, that's a wrap on the program this morning. Thank you so much for watching. Don't forget to join us by 1:30 for Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. Enjoy the rest of your day.